Рядом западных стран были приняты нелегитимные решения по так называемой заморозке российских активов. И вот этот коллективный Запад фактически подвел черту под надежностью своих валют. Об этом тоже мы уже говорили. Перечеркнул доверие к этим валютам. Мною принято решение в самое короткое время реализовать комплекс мер по переводу оплаты. Начнем с этого. С нашего природного газа, переводу оплаты нашего природного газа, поставляемого в так называемые недружественные страны, за российские рубли.
Russia again made financial news headlines this week as President Putin declared the European and NATO allied nations will effectively now have to pay in fiat Russian rubles for Russian gas. You can see here that economic powerhouse nations like Germany recently imported half their gas demand from Russia in 2020. A day following that declaration, the Russian head of the State Duma Energy Committee, Pavel Zavalny, stated publicly, quote, "We provide real resources, but we can't use fees for them. As soon as the euro and the dollar ceased to be means of payment, they lost interest for us. The rate is calculated in hard currency, gold, or in currency convenient for us." He went on to state, quote, "They won't pay for gas. This gas simply won't be available." So for, quote, unfriendly countries trying to buy gas from Russia, the choice of payment is apparently now gold and/or Russian rubles. Naive politicians in the West, including many here in the USA, are supposedly trying to sanction Russian gold reserves from being used in international payments. Never mind that Russia's over 70 million ounces of official gold bullion reserves reside within its respective borders, not held in risk-laden foreign central bank vaults located in New York or the City of London. For a quick illustration of how misguided average Americans are on this matter, here's a recent 90-second mainstream news clip laden with errors and mistakes. See how many you can spot as they are being made.
Transactions involving gold. Essentially, Russia can no longer trade gold for money or do any deals with countries willing to trade in gold. Let's break this down further. Gold can be sold through markets or dealers for a currency like the yen or the US dollar. This money can then be used to make purchases. But because of this sanction, these transactions are now banned.
Pause. Banned by who? She pointed at the fiat Russian yuan image, calling it the Japanese yen, a big difference in the USA's sphere of influence. Nations like China, India, Saudi Arabia, Turkey, etc., they can choose to ignore these Russian gold sanctions put on by the West and will likely do business with Russia in gold as the years and decades progress. More misinformation continues.
This matters because 20% of Russian reserves are in gold. That is roughly $133 billion. Russia's been steadily building its gold stockpile since 2014.
Nope. Russia has been consistently, transparently stockpiling additional official gold reserves since 2006 through 2019 in earnest. And that totals to about $144 billion in present-day gold spot price value.
To avoid the effects of sanctions just like this one. Now, previous sanctions against Russia's economy did not have the effects that they were hoping for. The Russian ruble, which we're looking at here, did take a major hit when Russia invaded Ukraine, but has since steadily recovered, in part because Russia is forcing exporters and its citizens to use the currency. Now, the goal here with this sanction is to close the loophole that Russia's been using to protect its economy and further isolate the country from the wider global economy. Rudabeh?
All right, thanks for explaining for us, Marley.
This is not to trivialize the crisis by pouring over 3 million Ukrainian refugees out into mostly other European nations is causing an exodus on a size and scale not seen throughout this full fiat currency era. While visiting Europe this week, U.S. President Biden admitted food shortages are coming to the world at large.
With regard to food shortages, yes, we did talk about food shortages. And it's going to be real. The price of these sanctions is not just imposed upon Russia. It's imposed upon an awful lot of countries as well, including European countries and our country as well.
Only days prior, while speaking to the Business Roundtable, U.S. President Biden acknowledged the fourth turning and a massive secular change afoot in the global economy. And what he likely means by the, quote, New World Order likely involves an increased sphere of multipolar influence powers, not unipolar U.S. dominant as it has been since the end of World War II.
I think, my mother had an expression, out of everything terrible, something good will come if you look hard enough for it. I think this presents us with some significant opportunities to make some real changes. We are at an inflection point, I believe, in the world economy. Not just the world economy, in the world. It occurs every 3 or 4 generations. As one of the top military people said to me in a secure meeting the other day, 60 million people died between 1900 and 1946. And since then, we established a liberal world order, and that hadn't happened in a long while. A lot of people dying, but nowhere near the chaos. And now is a time when things are shifting. There's going to be a new world order out there, and we've got to lead it. We've got to unite the rest of the free world in doing it. So anyway, I'm going to hush up, Mary, fire away.
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
When you love silver as much as me, it's really easy to get carried away. Sometimes I just can't keep my hands off of a good deal. So when SD Bullion told me that they wanted to give away some silver for free, I was happy to lend my voice for the cause. Now how much silver are they giving away, you ask? Boom! Yes! 500 brand new Silver Eagle coins will be going to one of you. Just click the link below and enter for your chance to be the next big winner. Yep, okay, got it.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. Silver and gold spot prices climbed slightly this week. The silver spot price closes just over $25.50 an ounce, while the gold spot price cleared key 1,950 ounce technical resistance. The gold-silver ratio stayed flat around 76. Personally, I'm still awaiting a more rapid gold-silver ratio rollover into the 60s and perhaps 50s before this bullion bull market is truly again off and running in earnest. Beyond the 2011 low is a conservative target long-term of mine. Well, speaking about the current gold and silver markets yesterday with Dale Pinkert on the Trade Gate Hub channel, 45-year financial market veteran Victor Sparandeo reiterates how many of us see current silver and gold valuations versus all other financial asset classes at the moment.
So here's gold. Looks a little bit like crude, spiked like crude, pulled back. This is a major breakout that technicians will turn kind of bearish on this. Again, could this be a failing rally and gold gets cheaper one more time into the summer?
Well, I believe that gold and silver, like most pros, like most people like me, they would say is most undervalued assets in the world, which they are. And I believe that this will be a real bull market in gold that'll go above the peak that you've just made at 2080-ish or thereabouts. And the reason is because you've added a new dimension here, the war in Ukraine, which is also now going to cause shortages, more printing of money. Yeah. So I believe that this could be a real bull market in gold.
Looking at capital inflows into major gold ETFs over the past month, both unsecured underperforming large ETFs like GLD and IAU have seen large pickups in Western investor inflows of late. Just over $13 billion in fiat US dollar equivalent inflows into Western gold funds have occurred over the last month of time. In the large Western silver ETF side of the equation, we've yet to see such size of inflows. In terms of the global gold market, though, we remind you yet again how tiny gold ETFs are in the grand spectrum of known mined gold throughout human history. Only about 1.75% of all known mined gold resides in these often headline-producing gold ETFs. The vast majority of physical gold in the world is held for store of value reasons. Between private gold investor bar and coin savings, high-grade gold jewelry stashes in nations like China and India, and with government central bank monetary gold piles increasing. Speaking of which, thus far in March 2022, India has nearly added another metric ton to its official gold reserve pile, while in February 2022, last month, Ireland added over 1.2 metric tons of gold to its increasing official gold reserve pile. This week, the team at In Gold We Trust gave an update on some long-term gold and silver-related charts, and we're going to quickly run through 9 of them here for a historic perspective of where we find ourselves currently. Press pause on any of the charts that we're about to go through to further study the data illustrated for yourself. In terms of gold finally going on a run of outperforming the stock market's S&P 500, here you can see how many multiples of outperformance lay ahead if gold does anything akin to what it did during the stagflationary 1970s. If we see something similar to what we saw then, we're talking about gold bullion owners being able to buy anywhere from 6 to 12 times the potential future S&P 500 if history rhymes at all. Let's focus in on this chart since the 2008 global financial crisis, and you can see the potential breakout that's currently underway. There's a similar and even possible more profound potential for silver versus the stock market's S&P 500 to come. If we see a 1970s-like outperformance rhyme yet again, if silver were simply to blow beyond its 2011 value versus the S&P 500, we're talking about massive gains in U.S. stock purchasing power potentially ahead for silver bullion holders. This chart disproves the persistent myth that somehow U.S. stocks protect against raging inflation and consumer price index ramps, such that we are increasingly suffering under today in the early 2020s. Illustrated here on this chart is 1970s, with the annual price inflation more accurately tracked back then, where it was in the middle teens at times, while the largest stock market index, the Wilshire 5000, often underperformed inflation by about half. This is the Buffett indicator, which measures the USA's annual GDP versus the notional stock market's value ongoing. We're currently nearly twofold, and that's the highest it's ever been during this full fiat currency era. We've never had the U.S. stock market this overvalued versus our national gross domestic product. This chart takes into account the amount of years between our doubling of our U.S. dollar M2 supply. One of the major reasons for such terrible price inflation in the 1970s was for the fact that the U.S. fiat monetary M2 supply doubled in only 7.6 years during that decade. We recently doubled our modern fiat U.S. dollar M2 supply in just over the last 7.67 years of time. Thus, the idea of the 1970s rhyming with this decade, the 2020s, is worth consideration. Yet also, we must remember how the USA got out of its post-World War II debt-to-GDP hangover by artificially pinning interest rates super low while letting price inflation run hot for a decade or more. This over 40-year chart illustrates the speed at which the oil price rises have typically preceded economic recessions, and it's possible we are either in or entering a recession sooner than later. Regardless of when the next recession arrives, the fact of the matter now in 2022 is that we are likely running real inflation rates in the double digits while the fiat Fed funds rate is near zero. Our record debt and unsafe for promise piles combine for over $100 trillion owed in the coming decades. The typical way out of this kind of mess is massive currency debasement, and that's likely what we're facing not only now but also moving ahead. Last week, our very own SD Bullion CEO Tyler Wall spoke with Wall Street Silver Channel about the recent change in the physical bullion market buyer profile. Apparently, not merely hardcore bullion stackers are buying, but new average investors are also stacking, ones who inherently know that bullion is a buy at the present time. I'll leave his full 15-minute interview in the show notes and comments below if you somehow missed it. Here's a brief clip that you should have a listen to.
Yeah, so this month is actually on pace to be a record month, being every other month before.
Even over last year when the silver squeeze was happening.
Even the short squeeze, January 2021, this month's on track to beat that right now. We're seeing huge demand for silver. We saw an uptick actually in gold sales once that day that Russia invaded Ukraine. We saw a huge increase in percentage of gold sales too. So in addition to record sales, record order count, we're seeing actually AOV, average order value, increase as well, which is which is at a record level too. So, we're seeing a different type of customer come into the market compared to what we have historically. We're seeing a lot more people that are new to the market, a lot more people that may have been looking at yields and, checking accounts and, I get a 0.5% yield here. I can buy some bonds, get 2 or 3%. And they're starting to, run the numbers and start seeing the CPI, the CPI is 10, 15, whatever you want to call it. I mean, obviously it's manipulated low. And they're starting to even see the actual government figures come out, and they're saying, well, wait a minute. If I'm getting paid 0.5% in my checking account, or I'm getting a yield on a bond or a dividend payment of 3 or 4%, what does that actually equate to when inflation's at 10 to 15%? And maybe I should be looking at hard assets, even if I paid 0.25%, 0.5% to store it, or if I took it to my house, even if in that situation, purchasing power is being preserved by the physical metal. And so we're starting to see these people that haven't invested in precious metals before, maybe thinking that they're, going through school in their finance education and being told about this, precious metals don't pay a yield. And they're starting to figure things out. And we're seeing a lot more new people entering the market, and they're entering in a big, big way.
Further along in that same interview, again, it's linked below, Tyler speaks to the latest silver planchette shortage at the U.S. Mint, which has set off an overall diminishment of silver bullion product supplies from sovereign bullion coins all the way down to private silver bullion rounds and silver bullion bars. Bullion dealers are certainly defending their dwindling silver bullion supplies by increasing product price premiums across the board as a result. Replenishing their inventories is both increasingly costly and slow with current record demand levels. At the moment, it's becoming difficult to find small retail 1-ounce and 10-ounce fine silver bullion products priced below $30 an ounce. And we have evidence today that silver bullion demand in Europe is also booming of late. This image, taken just outside of the Austrian Mint, shows lines forming for bullion buyers, is becoming a regular occurrence there now. Then again, what we're seeing today is nothing compared to the rush of demand spikes likely to come when fiat currency stores of value get called into critical questioning by the larger mass of investors ahead. Getting prudently positioned before that will be key in preserving wealth and purchasing power over the long term. That's all for this week. As always, to you out there, take great care of yourselves and those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.